other macroeconomic inputs that are coming, of course, oil prices, Amrish, are going to be, something that we will have to continue to watch for. We've seen
Absolutely.
last week, crude jump on the WTI index to about $87 per barrel. Even yesterday, we saw, the oil data coming between $84 to $85 per barrel. And now we are looking at the month of October, when there could be another voluntary cut from the OPEC plus bloc, which is likely to cut down about, about $1 million per barrel or so. So, how do you see this oil story pan out? India's estimates suggest that at about $90 a barrel, we should find a decent equilibrium that will sustain growth as well as consumption. But any chances of that $90 a barrel getting breached with OPEC cutting down on oil, especially given the fact that even Russian oil is not as cheap as it used to be when we bought it at $30 a barrel or so. So how do you see this entire oil story panning out in India?
Absolutely. I mean, I think that benefit which you're getting from Russian oil, that's already quite down, and because of which we have reduced our imports. I think the last 2 months, the imports from Russia has been lower month on month, and I think that will continue. And at the same time, if you look at the oil prices, yeah, I mean, up to $90, $95, I don't think there'll be too much of an issue as far as the Indian economy is concerned. I think the issues will be beyond that in case we go beyond $95, which I just hope it doesn't. But looking at the sort of data and the news flows which are coming, there is a possibility. And I think that issue will be bigger for the government because we are getting into the election season. And there was an expectation some time back that we could see a cut in the retail prices of diesel and petrol. But in case we see 90, 95 plus, I really don't know as to how the government would be able to do that. I mean, just like the way they cut the prices for LPG by 200 rupees. So it is expected. I mean, it was expected that there would be this populist measure by cutting the excise duty. So that's something which would need to be closely watched out for.
And since we're talking about import of oil to India, Russia's import, which was at about 42% in the month of July, has come down to 34% in the month of August. So there is obviously a decline of import of oil from Russia to India. What would you attribute that to? Is there a slower consumption? Because when you look at auto data, there's a different story playing out there. There are more sales, there are more automobiles out there in the market. What exactly is hurting oil consumption in India, if at all? Or are we now looking at alternative to Russia at this point in time?
No, I mean, we are clearly looking at an alternative to Russia because the price benefit or the price advantage which we had in the whole of last year, I mean, that was slowly going off. And in fact, we had the minister also quoting that we have found alternate supplies which are better than or advantageous to us as compared to Russia, and because of which we have seen that the Russian imports have steadily come down in the last 2 months.
Okay, let's look at the oil PSU stocks this morning. If we can pull up that data, Amrish, what would be your sort of call on oil PSUs, ONGC, GAIL, Bharat Petroleum, Indian Oil, etc. Are these good stocks to hold right now, given the fact that crude prices could actually go up and consumption in India is not likely to ebb? So, what should be an investor's call on oil PSUs right now?
I think on stocks like ONGC and oil, Oil India, I think one should be bullish because the oil prices are going up, and like we discussed, it's very much possible that we could see oil prices between 1995 or slightly higher than that. But when it comes to OMCs, I mean, I would be a bit cautious at this point of time because, like I said, because of the general elections quite soon, I mean, there can be a cut in your petrol and diesel prices, and I don't think the government will completely absorb that cut via excise. There could be some sort of pressure on the OMCs. I mean, who have been enjoying high margins in the last couple of months. So I think one should be a bit careful of the OMCs at this point of time.
All right, one should be careful. That, of course, is the word coming in from Amrish Baliga at this point in time. So thanks very much for taking time out. Thank you for joining with all your inputs. And we look forward to having you back once again with us.